Welcome back. Lower gasoline prices and hefty rebates helped Ford Canada drive truck sales to a 20-year high this year. But those deep discounts are unsustainable, according to company CEO David Mondragon. I spoke with him after his address to the Economic Club of Canada today and began by asking him what lessons car makers have learned from the near collapse of the U.S. auto industry.
I think first and foremost, it's to deal with the realities in the marketplace today. We traditionally have had an industry that dealt with major levels of overcapacity. Globally right now, the capacity for the auto industry is 92 million units. The demand last year was only 60 million. So great levels of overcapacity. What we dealt with at Ford was some very difficult decisions. We closed 28 plants worldwide. We let go 120,000 people worldwide. And what we really did as a company is right-sized our supply with demand, so we trued it up. And that's one of the most fundamental things that we did. And truly, if you look at the industry today, it's one of the fundamental issues the industry has today. Still, very high levels of overcapacity. And the overcapacity is really in mature markets. North America, Europe, South America is still growing very fast. They need to add capacity there. But really, where the capacity needs to be put in place, and it's growing very fast, is in India and Asia. So those are the markets that are really exploding.
And I guess traditionally one of the ways that you deal with that overcapacity is with rebates, right? You lower your prices and you move your inventory. And
yeah, that was the way that the industry used to go to market. And quite frankly, that was a broken promise. For us, for our shareholders, it was not the right way to go to market. And we artificially used to inflate the industry to drive volume at a higher level that was not sustainable. But we had to do that because we had this big level of capacity. We had these fixed operating costs. We had people that we had to pay. We had buildings that we had to support. So we had to drive volume through. Once you right-size your business, you can go to market much more sensibly. You can lower your dependency on incentives. You can go to market and hold a better margin for your company, for your dealers. And quite frankly, you can also get a better value for customers because you can lower your prices at the same time.
You mentioned adding capacity in Asia. How aggressively are you doing that, and when do you think you'll be where you want to be in that balance?
Yeah, the Asia market is growing exponentially, and it's growing day by day. If you look at the forecast, within 10 years, the Asian market, if you add just China and India alone, so just those two markets, the industry should be about 42 million pieces. Now, to put that in perspective, if you add all of North America, U.S., Canada, Mexico, all of South America, and all of Europe, it's a smaller number than those two markets will be in 10 years. So all the growth is there. There's a lot of brick and mortar being put in place by all the manufacturers, and then there's a lot of people that are migrating to there.
One of the challenges of your industry, and you've touched on this, but has been the length of time that it can take to respond to consumer changes. And I guess a key example would be the demand for more fuel-efficient cars, right, as oil prices were really surging. Everybody was caught wrong-footed by that. Has that been changed?
Yeah, it's been, I think, fundamentally, at least at Ford, it's been changed. I think that the industry in general has learned their lesson as well. We are shifting our mix very rapidly. By the end of 2011, Ford will be producing, and here in Canada and North America, 60% of our vehicles will be cars and CUVs. Just a few years ago, our mix used to be 60% trucks. So we've got a 20% shift. That's a quantum shift in our industry. So where we're going to grow our business as we go forward is in small cars, CUVs that are car-based platforms that are very fuel efficient, and they're great for people, and they're great for value and affordability. And those will be world-class products that we'll leverage throughout the globe.
So 5 years from now, you have more of a mix of smaller cars, hybrids, electrics. Describe what Ford will be.
Yeah, well, just 1 year from now, we'll have a better mix of cars and CUVs. But as we look in the future, we'll have a full array. We're bringing 5 new electrified vehicles by 2012. Ford Motor Company right now is the #1 producer in North America of hybrid vehicles. We're #2 globally. So we have a huge footprint in the sustainability world. As we look at new options going forward, though, hybrid is really going to be the call. It's more affordable in that arena as we go forward. And we think by the end of this decade, the mix of hybrids could be anywhere from 20 to 25%.
I guess the risk to that scenario would be that we see a deflationary global environment, oil prices sink, and people decide, hey, let's stick with our traditional cars because gas is cheap. If that happens, what's the contingency plan?
That's a great question. We don't think there'll be any risk to that scenario where oil prices will go down. Look, when the world economies really are flat right now, flat, and they're way under indexed in terms of their traditional GDP growth rate. So GDP will start to pick up globally. Demand, as I said, in India and China will start to pick up exponentially over the years. With that, there'll be demand for more fossil fuel. Canada is in a great position as a country, though, because we have such a great commodity resource. So what that is going to do is that's going to help strengthen our dollar over the long term in Canada. But what it's going to do globally is going to drive up the cost of those resources. Fuel prices will go up. I would say that we're looking at, within the next couple of years, oil will be well over $100 a barrel again. Once that happens, customers will be forced to shift their buying patterns into more smaller and more fuel-efficient vehicles, and that's going to happen. We're going to be so well positioned when that happens.
So what do you see as the biggest challenge or the biggest risk specific to Ford, not to the auto industry overall, but that you have to deal with?
Well, I think the biggest risk right now, again, is the economy. You know, we need the economy to put it in gear and move forward. I think that's first and foremost one of the issues that we face globally. We need other markets, Europe, South America, Asia, all to get up. U.S., we need it to get up and going as well. So I think if you look at an overlying risk, that's number one. Complexity is a big issue in our industry as well because we're global now. We're sourcing vehicles across the world. Again, I mentioned earlier that we have reduced our nameplates in the world from 97 to 60, and our goal is to get down to approximately 20. So we're going to have fewer vehicles, but they'll be spread across great areas of geography across the world. So we've got to manage that as we go forward. And I would say those are probably the two biggest challenges we have. Most of the opportunity comes, though, as the economy picks up and the industry picks up. I think it's going to heal a lot of wounds for a lot of companies.
David Mondragon, thank you very much.
Thank you very much for having me.